Yes, good morning, Maharaj. Hope I'm audible, visible.
Yes, sir. Good morning.
Thank you. Yes, students, good morning. So welcome back to Trading Strategies.
Good morning, sir.
Good morning.
Good morning, sir.
Good morning. So we will now start with where we left off in the last class. So we were discussing something about the price action trading in the last class. So let us recapitulate what is this. So tell me, what do you understand by price action trading, class? Yeah, anybody knows the answer?
Sir, movement of price plotted over the time.
Okay, so the price is there and there is going to be time. So time is on x-axis and the prices are there on the y-axis. We know that. Okay, so we plot it and what the graph we get is actually called as what the price chart it is. So what is this price action trading then?
Maybe on the basis of price, at which price one should enter and exit.
Okay, so based on price itself, we would like to trade. Okay, so that is actually called as what the price action trading. We are not going to take into consideration of any indicators here. Price indicators, all that will not be using as such. And that is why it is actually called as price action. We'll see what is it once again for the benefit of the students. So it is used by many market participants to predict the future direction of the price of a security or the market, right? So put it simply, the price action is how price changes and we want to watch the action of the price itself and we would like to predict the market. Okay. So the price action trading is a pure form of technical analysis since it includes no second hand or price derived indicators. So how the indicators have been formed? The indicators are formed by using the price and the volume data itself, right? So we are not using indicators at all here. Only the purest form of technical analysis is what is actually called as the price action trading. We only take into consideration of price for determining where to enter, where to exit, all that. Okay, then it is actually called as the price action. So traders are solely concerned with the first-hand data that the market generates about itself and its price movements over time, right? So it's only the price which is important for us, okay, as per this theory. So a trader can use a market price action to try and describe the human thought process behind a market movement. Okay, by looking at the price, we want to predict what lies ahead. Okay, so every market participant in the market will leave a price action clues on the market price chart as they trade their markets. So everybody who trades in the market, what they do is they will be leaving us the clues. So based on those clues, we would like to trade in the market. Okay, so the clues can be actually seen in the price if you know that particular acumen to look at the prices in that way. The price action traders keep the charts very simple. Trading is something many people overcomplicate by clouding their charts with the numerous technical indicators. You have seen that many a times the moment you see the chart, the candlestick chart, many of us, what they do is, many traders in other words, what they do is they'll be loading the chart with so many indicators. The price is not visible at all. Okay, so they're actually, in other words, they are over analyzing the market. So we should not actually over analyze the market. But in case of technical analysis, it has been said that less is more. Don't forget this, the less is more. Okay, so it is referred to as a clean chart trading, or it is also called as naked trading, raw or natural trading, in reference to the trading from a simple price action, only price chart. Okay. So we are discussing the price action trading in the last class, and we started off with single candlestick patterns, and we discussed about Morobozu. Okay, so what is Morobozu? Anybody would like to say at this point in time, what is Morobozu?
So Morobozu is a tailless candle.
Okay, the tailless candle is called as the Marubozu because there are no shadow. A shadow, in other words, also called as wicks, and there is no wicks as such for that, and that is why it is called as Marubozu. Okay, in other words, it is called as bald in Japanese language. That is what we have discussed with respect to Marubozu, and we have understood that to some extent how to also trade using Marubozu, where we should keep the stop loss and where we should actually keep the target price. We discussed that in the last class. So I repeat that what I said in the last class. So you can see, concentrate only on this blue candle, the big candle, what you're actually seeing. You can concentrate only on that. You know what is close? Where is the close here, right? So close is here, right? This is the close price, and this is the open price. Okay, so bald it is because there is no shadow or wicks here. That is why it is called as Marubozu, as we discussed. Assuming that this is 100 rupees and this is 103 rupees. Okay, so 100 rupees it has opened, 103 it has closed. That is what I mean by it. Okay, so where should we take the trade? When we come back next morning, assuming that this is the only, this is until only this it is visible, and all these candles are not visible to us. Assume that these are the candles not really visible to us. What we have to do is, at 103, above this particular price point, we should go long, and keeping below this as stop loss. If I say that, then what is my, where should I enter? I enter above 103, and I should actually keep a stop loss below 100 rupees. So why should I keep a stop loss below 100? Because if the stock price goes below 100, that means, what do I mean by that is, the technical analyst is predicting that the markets can actually reverse its direction, or it can continue its pattern. You can see this is the, what is the trend here? This trend is downtrend, right? So the downtrend can continue if this is not going to trade above this 100 level. Okay, so the moment it breaches this 100 level, what you can safely assume is you can actually exit out of the trade. So whatever the loss is there, you have to book the loss. Okay, so you can understand that there is actually going to be a risk which has been involved in the intraday trading. Okay, so if you don't like to take the stop losses, in other words, don't come to the trading activity at all. Okay, if you don't like stop losses, taking stop losses, if you're fearful of stop loss, okay, then what you should do is you should never enter into the trading arena at all. You're a person maybe suitable for investing, maybe trading is not your cup of tea. That is what you have to be understanding. And I'm upfront in saying this. I may be blunt in saying this. Yes, that is what it is. If you don't want to take any stop loss, you should not come into the trading strategies as you may not be interested in trading as such. Okay. But however, if you're interested to know how the trading works, definitely this is the course for you. Okay. So you should be getting out with this trade the moment it breaches 100, means maybe 99 rupees and 95 paise. Maybe your stop loss, maybe 99 rupees and 85 paise, maybe your stop loss. You decide what should be a stop loss based on the price, as I rightly told you. That is what is your stop loss. Okay. So in the technical analysis, or maybe in case of trading, the stop losses are inevitable. Okay. If you're not ready to take the stop loss, means you don't have right mindset to tackle the markets. Okay. You have to set that particular mindset before you come into the trading zone. Okay, so you're not looking this as an business activity. You're thinking that as a layman, if the market is going up, you are going to be going long. If the market hits the stop loss, what happens is you don't want to take the stop loss. You want to again remove the stop loss, and somehow you want to take the delivery of the stocks. If you have got this mindset, you don't have a trading mindset. Okay, so please be aware of the markets, in other words. Okay, so at 103 and above, you should be buying it. So what happens if you have bought this above 103, assuming that you bought at 104? Okay, 104, assuming that it is somewhere here, you went long, and keeping below this 99 rupees and 85 paise as a stop loss, you entered the trade. So what has happened? The market has come down below your price. What price you bought? 104 you bought. It has come below that after that. Okay, and then what has happened? It has moved up, and you can see again it has come down. Okay, and then it went up like anything, which means we are discussing this as a positional trade. Okay, this is actually suitable, whatever the candlestick patterns, what we are discussing. Okay, so this is actually suitable for the positional trades. I am not saying that this is not suitable for intraday trading. Maybe your time horizon, maybe at that point in time, the time frame may be 1 hour at that point in time. So you know that the daily time frame is very difficult to violate when compared to 1 hour pattern. Okay, so as and when it decreases, violation becomes very easy. Okay, so when compared to 30 minutes candle time frame, 1 hour time frame is actually quite strong, in other words. Okay, so just a minute, I'll just keep mute. Yeah, sorry for the disturbance. So we have to go long at 100 above 103, and you can see the markets have actually gone up like anything. So I was discussing, we were discussing about the time frames. So as I told you, 1 day time frame is very easy to violate when compared to weekly time frame. So as and when you go higher in the time frames, it is difficult to violate. That is what I am trying to say. I don't know how many of you understood. Just in case if you got a question regarding what I just now explained, you can ask me. Otherwise, we'll move on to the next slide. What do you mean by violation is difficult in the higher time frames? What do you mean by that? Yeah, anybody?
So
Sir,
that
it
means,
generally means.
Yes,
Okay, go ahead.
Arindam.
okay, okay. So that means the pattern will be maintained. Like there is a very less chance that it may get violated, means there is a very less chance it won't be maintained. Like
Yes,
if you put
yes.
a stop loss, there is a high chance the stop loss will get hit. But in the
Hmm.
longer time frame, it may not.
It may
happen.
not hit that easy. Okay, that's right. Okay, so yes, Roshan, do you have any other version of saying this answer, or it is the same answer what Arindam is
It's the
giving?
same, sir. Same.
Okay, great. So next we'll go to the next one. So we discussed this trade setup. So as it is evident, the candlestick pattern do not give us the target. We have discussed in the last class also. So the target will be what? Sir, then how to fix up the target? You know, you have told us when to enter and when to exit also, that is stop loss. So, but how to exit? After making profit, where should I exit? So for that, let us, when we discuss the support and resistance level in detail, I'll explain what is it, where to exit, we will understand. So we have to look for a particular levels. Okay, to some extent, some of you must be knowing what is support and resistance levels and how it is being created and all that. So we'll come back and discuss how that is created and what is the importance of support and resistance, how it is formed, all that we'll be discussing. Okay, so when to buy the stock? Okay, so when to enter the trade, there are two types of traders we normally look at. So one is a risk averse trader and the other one is a risk taker. Okay, so what is this risk averse and risk taker? I'll again go back to the same slide where we left off. Okay, supposing that, assuming that this is the only candle visible and these are the candles not visible, and you know, the history is again evident. So the market is in the downtrend and this long bullish candle has been formed and you don't know about all these candles for a while. Okay, so now you know that today, assuming that this candle is under making today, assuming that today it is 3:25 now, the time is 3:25 p.m. now. Okay, and what happens is, you know that in the next 5 minutes, market is going to close and it is going to close near its high itself because it is the high point. And you are looking at this particular formation of the candle and you are very sure that at 3:30 p.m. when the market closes, this candle will close exactly at the high point only. Okay, you know that. Okay, because you're observing the market for the last whole of the day, for the last 6+ hours, and because of which you're quite confident that it will close at, there is no chance that it will close somewhere here or maybe here or something of that sort. You're pretty sure that it is going to be 99% you're sure that this will be bullish Morobozo. So what you'll do as a trader, tell me? At 3:28, at 3:29, what you'll do as a trader? Assuming that you want to take some positions at this point in time.
We will go long for next day.
Okay, so you want to take a chance now. that you might go long here. Okay, if you are a trader and if you are doing that and you are taking a position thinking that this is already Morobos already formed here. Okay, so because of which I would like to go on a trade, because there may be chances that tomorrow, what if it is going to gap up opening? You know what is gap up opening, right? Okay, so what is gap up opening tomorrow?
Sir, it is the difference between the previous day closing price and next day opening price. So the difference between that is gap up or gap down.
Correct.
Gap up.
So you can see the gaps will be there in the market. Okay, so you can see in this particular candle. Okay, so take into consideration of this. Slightly, there is a difference between the see the close is here, the open price is here. It is so there is a huge gap between the close price of this candle and the open price of this candle, right? Can you see this? And this is actually called as what? Gap in technical analysis. Okay, if there is a gap, then what happens? You will miss this trading opportunity and you want to bank upon that particular opportunity. And because of which you went long without waiting for this particular candle to close, and you have not waited for the next trading day, you went and bought this candle. Means you went and bought the stock exactly at 328 or maybe 329 before just before the market are actually going to be getting closed. So if you do this, then you are actually called as what? You are a risk taker. So why should I call you as a risk taker? What is the reason?
So taking overnight positions can be dangerous.
Can be dangerous. So why it is dangerous?
So anything can happen overnight. Like as our market, most of the time it follows the Dow Jones. If there is a huge fall in Dow Jones, maybe the next day morning it will open gap down.
So
If
in
there are
other
any
words,
other
we don't
news-
know what is the news that has been cooking in the night.
Yes, sir, exactly.
So because of which we are quite taking overnight positions will be very difficult for some. And if you are taking it, then definitely you are actually assuming some risk, and you have to pay more money. It is going to be CNC. It is not going to be what? It is not going to be mark to market. In other words, you are not doing intraday trading. You are going for a positional trade. And because thinking that tomorrow it is going to be a gap up opening that might come up, and you don't want to take that chance, and you are very damn sure that it is going to be going upward direction, and because of which your prediction is not going to fail for tomorrow at least, and because of which you take the position today itself before 3:30, before the market closes, then you are actually called as what? A risk trader. Who is a risk averse trader now? Can you tell me? You have understood who is a risk trader now? Who is a risk averse trader? Risk averse means who don't want to take risk. Okay. So if you are a risk averse, what you will do normally?
We'll wait for tomorrow.
Yeah. So you will wait for tomorrow, and once when after market opens, if it is going above 103, as I told you, then only at maybe 103 rupees and 20 paise, maybe you might go long if it is going up. Supposing it has opened up 105 rupees, 103 rupees and 50 paise, and you will buy at that price itself. Okay, 103 rupees and 50 paise you are going to buy, and you will be there on the trade in the trade itself. And if it is going up same day, then you'll be selling it and you'll be out of the trade. Otherwise, if stop loss hits, you'll be exiting the trade same day or maybe next day, whatever it is. See, normally the what we are discussing right now, it is a positional trade. It is okay. So our intention is we will buy the stocks now, and we will hold for some day, or maybe we are interested in swing trading also, maybe for a couple of days, and after that we would like to sell, and that's how we want to make the money. Because not everybody, intraday is not going to be suitable for everybody, right? Because supposing if I have a day job, okay, so I'm a professor and I should be engaged in so much of activities in my day job, so I cannot be offered to take up intraday trading as a full-time activity. So because of which I can think of doing this as an swing trader or a positional trader. What I can do is I can come to the market. Okay, which means I'm a risk averse investor, a risk averse trader. So that way also it can be done. So understood now who is a risk averse trader and who is a risky trader in this at this point in time. Hope it has been clear now. So we are going to the next slide. Yeah, we discussed all this, what we have discussed. What is there on the slide, it's already been discussed. You can see this. Okay, supposing that you're a risk taker, what must have happened? Can you interpret this particular chart now? Assuming that this is the Marubazu. Can you interpret this chart now?
Yes, sir. So if someone is a risk averse trader, so he's seeing that the market is bullish in the blue candlestick.
Yeah.
But if he's risk averse trader, so he will not take trade for the next day. He or she will wait for the next day to see what is the trend going on the next day in the market. So that's why the risk
Harshit,
averse
supposing that you're a risk trader and you bought exactly at almost at 329, you have bought it. Assuming that you're a risk trader, okay, risky trader. Okay, so what must have happened to your position? Can you explain?
Yes, sir. So next day, so I will be getting in loss because in the next day the market is going to downtrend. So
Mhm.
by that means I will be getting loss, sir, at that point of time if I am taking the trade in the time frame of 3:29 p.m. at the time of closing the market.
Yeah, you can see at 329 you have taken up this. You have not waited for this candle to close and you have not come back on the next day. You have bought it same day when this particular candle is in the formation. And you're actually paying the price for it because since you're a risk trader, you can see what has happened. Next day, the markets have opened at what price? Okay, so markets have opened at what price? And it is lesser than what you have actually entered, which means you have incurred a huge loss. So you must have exited at this position. The moment market has opened, you must be feeling like exiting that trade. Getting it what I'm saying? So this is actually going to be there if you are a risk trader. Okay, if you're a risk averse trader, what must have happened? Let somebody else can actually now tell me. Supposing if you're a risk averse, what must have happened?
So if I'm a risk averse trader, I won't take that trade that day. So I'll wait for next day's confirmation, and next day if it opens below that, I won't take that trade.
Correct. It is as simple as that. So you're a risk averse trader. Then next day you waited for opening above this particular price or trading at this at any point in time more than this. It does not happen that way. So that is why you just ignore this chart and you will not consider, you will not even enter into the trade at all. I hope everybody is understanding what I'm trying to explain here. I know this is online class, but I have seen many students are just logged in for the sake of logging in. I don't know. So just in case you have understood risk trader and risk averse, what we have discussed just now, okay, you can raise your hand so that I'll understand you guys are there in the class or they are just logged in. 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Okay, some 17 students at least are listening to me. Okay, so out of 35, some 17, 18 students are listening. Okay, so you can close, you can, okay, we'll go to the next one after discussing this one. Okay, so tell me, why is this a blue candle? We have discussed that the green candle, right? Why it is in blue color now? Is it the same as green?
Yes, sir.
Yes, sir.
Yeah, as I told you, you can change the color also. Okay, as I told you, we can in the settings, if you go into the chart pattern, in the chart trading view, whatever you're using it, you can change this color also. Here they have used, instead of green, they have used the blue color. Don't get confused out of this. Okay, so go to this particular candle and tell me what has happened here. Concentrate on this chart and tell me, can you interpret this?
So after the closing,
Yeah, go ahead.
after the closing of the candle, there was a confirmation that it may go up, but it didn't went, and we at the stop loss got hit here.
Yes, you can see the next day, the trader has actually taken up this particular position, thinking that the market will go up for the next consecutive days. So what has happened after he entered into the trade, the next day itself, after that day, okay, after that day, it has not, third day, after the third day, you can see it has breached this particular stop loss. So he must have entered the third day of he entering the trade. Okay, so this may also happen, and that is how we should, since I told you it's part of the game, should exit with no feelings and you should move on. That's it. That is what I can say. Okay, so because stop loss are bound to be there, as I told you, the technical analysis work to the extent of 70%. All your things are correct. Okay, but and we have not discussed the support and resistance levels and other trading techniques as indicators. We have not discussed. Only if you're trading based on the candles, only based on the price action, based on the candlestick pattern, this is what it is going to happen. Okay, if you want to improvise on your trade, what you must have done, okay, you must have used your support and resistance levels and all that. So we'll discuss that in the days to come. In the next few sessions, we'll be discussing that. So as of now, if you're trading only based on this, then you should be exiting and you're booking your loss. Your stop loss has hit third day. That is what it is evident out of this. And then I'm moving on to the next one. Hope everybody understood this. So booking a loss is part of the game. So even a seasoned trader goes through this eventually. So however, the best part of following the candlestick is that the losses are not allowed to run indefinitely. Okay. So the bearish Marubozu, what we have discussed exactly is opposite of the bullish Marubozu. Exactly opposite of that is a bearish Marubozu. Okay. So what has happened here, we'll discuss. Okay. It is the same. It is open is equal to high. Close is equal to low here in this case. It does not matter what the prior trend has been. We have discussed that for Marubozu, it is not the constant. So traders should look at the shorting opportunities at bearish Marubozu, and we know what to do. So you go short exactly below this, and above this particular price is going to be your stop loss. So you are entering the trade below this point, and above this will be your stop loss. And what has happened here? You entered into the trade, and it did not hit the stop loss at least, but it went on going down, and going down. And at least a trader must have made some profit in this chart. Okay, in this. And next comes, see this one more chart again here. So profits are there in this as well. So failure of bearish Marubozu, we'll see now. Can you see this? There is a failure here. So the as per the Marubozu, the stock price must have gone down. Okay, but it never gone down, which means you never entered into the trade at all. Okay, it turns out to be a bullish trade. So there is no suffer of loss here, but you did not take the trade because it does not really given you any sort of entry opportunity at all, right? So trade trap. So please concentrate on this. This is very important with respect to this. So one should avoid trading during an extremely small or long candle. Okay, so extremely small means what? The range between low and close with respect to Marubozu is only 1%, as against 10%. In both of the instances, you should not be taking the, you should be avoiding the trades. So why we should avoid the trades? Why we should avoid the trade if this is the case? If it's the small body of the candle is small, if the body of the candle is big, okay, so it is there. What is the tip is you should not be entering into the trade. So what is the reason?
Maybe the chances of making money is less. The price difference is less.
Yes, sir. The risk reward ratio won't be favorable.
Yes.
And
Yeah, go ahead, Arthur.
so the risk reward ratio won't be favorable. And in the case of 10% range, the volatility may be too high and we might not be able to sit through it. It might cause a lot of loss.
Yeah, in other words, can we say that the stop loss will be huge in case of
Yes, sir, it will be huge. It has to be huge. Yes.
Is it not? So that is why we are suggesting not to go for 10%. If the price range is 10%, okay, then think twice before entering it. If it is 1% range, then what happens is your stop loss may be easily violated, right? So that is a reason. That is a reason actually. You might think of avoiding the trade. It is up to you. I have told you, Marubozu, how it works. It is up to you whether you would like to take the trade based on it or not. If you are very comfortable looking at the candle size of the candle or body of the candle, you can decide whether to trade or not to trade. Okay, that is what it is. The problem with lengthy candles would be the placement of stop loss, because the stop loss will be very deep. the stop loss would be deep, and in case the trade goes wrong, the penalty to pay would be very painful. So conclusion, for this reason, one should avoid trading on candles that are either too short or too long. You decide what is long and what is short. I'm just giving you a guidance of 10% and 1% range. Okay, so after understanding this, okay, so tell me like how to actually now know that some formation of Morobos has happened. Let us actually discuss practically now. Now we have understood theoretically what is this. Supposing now we want to trade based on this, how we should actually screen the stocks. Can anybody tell me how to do this? Yeah. Hope you have understood my question. My question is, I repeat, you have understood the Maraboso, how to do Maraboso and how to make money or whatever it is. Now we would like to know out of 5,000 plus stocks which are listed, okay, which all companies have made Maraboso last day. That is previous day. Then only I can take the trade today, right? I can enter into the trade today. So how should I scan the stocks? I'm asking you.
Sir, I believe that this kind of pattern will be formed in momentum stocks only. Because if the case is in momentum, a chance of forming a Morobozo is quite higher. So we can screen for momentum stocks and then we can take it from there.
Okay, if I say the same answer, would you agree that answer? Sir, you are saying only theory, it is not practically tenable because I can't really scan all the 5,000 plus stocks, right? How
No,
you
sir. We should only look for momentum stocks which are in momentum currently.
Okay, momentum stocks are assuming that there are 500 stocks in momentum. If you consider F&O stocks, front-end stocks, blue chip stocks, A category stocks, assume that there are 500 stocks. So are you going to look at all the 500 stocks?
No, sir, we don't need to look at all the 500 stocks. We should be looking at the stocks with which we are at most comfortable. For example, I would say that I am more comfortable trading in auto stocks, for example, let's say. So I should be focusing more on those stocks because I have an idea about how these stocks work. So it would give.
Obviously, I'll if I've got some 10 stocks, if I'm in my watch list, I'll be watching. Obviously, hereafter I'll be looking for Moroboses.
Yes, sir.
Okay, I'm asking apart from your screen, what you've added as your watch list.
There might be an option to run, we might run a query on a screener. There might be an option to run a query where we can, get idea about the stocks which had Morobos from previous day.
Okay, great. So
Sometimes top gainers and top losers can have model versions.
Very good. So that is also one of the hints. So I'll show you some of the things which I know. Okay, so please concentrate. So you must have heard this website Trendline. Anybody knows this? I go to Trendline.
Yes.
Okay, so I go to screeners here. Hope your question, my question you must have understood before you are actually looking at observing what I'm actually discussing. So my question you must have understood, that is what I'm thinking now. So go to candlestick. After hitting the screeners, go to candlestick. So when you go here, you can see bullish single day patterns it is here, right? So we are discussing bullish single day patterns only, right? So I click on it and you can see here the white Morobos. And there are other patterns also we'll discuss when it comes. So I'll go to white Morobos. So white Morobos, I clicked it. So I got this stocks now. You can see KZ leasing and finance. You can see concentrate on market capitalization. It's only 5.2 crores market capitalization. You want to trade the stock which is having only 5.2 crore as market capitalization?
No, sir.
Think about it. So Virta, whatever it is, Dharni Finance 3.4 crores. So what I'll do is for my benefit, for the class benefit, I'll make it descending order. Okay. So descending order, ascending order, I'll do it. Okay. So I got a CCI, that is Container Corporation of India, Elantas Beck. So you can see this stock is a mid cap stock. It is 39,482 is the market capitalization. This is the only stock we have got it. Hindware Home Innovation is 3,000 crores. So traders normally don't enter if the market capitalization is very less. At least some 90,000 crores should be there. Other than that, we will not consider it as a trading stock. Hope you have understood what is a trading stock now, right? We should not be, technical analysis will not work efficiently if the market, in other words, if the stock don't have liquidity. You know what is liquidity? We already discussed in corporate finance part 2. Okay, if the liquidity is very less, if number of shares bought and sold is very less, okay, then the technical will not work. If it is an operator stock, also technical analysis will not work. What do you mean by operator stock? Operator stock means what?
So where there are large, a single player is there where he trades in huge quantities. So if buys in huge quantities, the share may go up, or if he sells in huge quantities, the share may go down. So small cap, normally small cap stocks are operator stocks.
Yeah, so small cap stocks are actually the operator stock. Why we call it as operator stocks? Because the large amount of shares are there with only few hands, right? So if I want to influence the stock today, what I'll do is I'll just keep on cornering the stocks today, and because of which what happens, since I have got already some 70% of the stocks already with me, cornering another 10% will be easy. Supposing there are only 1 crore shares and 70 lakh shares, you already have it. So since it's a penny stock, assuming that it's a penny stock, okay, if you start buying it, then what happens? You can influence the stock price. Okay, so technical analysis, don't do technical analysis on the penny stocks. This is a very important aspect. Penny stocks means the stock price which is lesser than $10 are actually called as penny stocks, going by definition. But I say if the stock price is lesser than 20 or 30 rupees, don't do any sort of technical analysis on that. In most of the cases, it may not be tenable. So that is one thing. And if it is an operator stock, also don't in fact do technical analysis of that stock. I'll show you how an operator stock looks like. Okay, so and you should do technical analysis for the first top 500 stocks of the market. Okay, so something like A category stocks, blue chip stocks only you should be doing. Even if it is mid cap, also it is fine. But ensure that is going to be a blue chip company, or maybe having some market capitalization more than some 60,000 crores, then only you can afford to do it. Okay, so otherwise we can ignore it. So going by this, I should have only Container Corporation of India. What I'll do is I'll just take this up. I'll put Container Corporation of India now, CCI. So container. Okay, I have to look at the spelling. C-O-N-T-A. Yeah, Container Corp come up now. So this is the stock. Can you see this looks like what this looks like Marubozu. Okay, today it is today's trading, because you can see it is a daily chart. It is, we are there in the daily time frame, and this particular candle has been formed today only. Red candle, what I'm saying, and this green candle is yesterday's candle. So do you agree that this is a Marubozu?
Yes, sir.
Yeah, if it is a Marubozu, then definitely you must have bought this stock above this price. What is the yesterday's close price?
652.55.
653, just it is 653. It is. So today's what is happening to this today's high? It is 654. So we would have entered into this particular trade going by this. Since I have some doubt about this candle, I might wait till 655, and after that, if I would have actually thought of buying it, okay, I should wait till this particular stock breaches 655. 655, I should be waiting it. Okay, because you can see a small wick here, right? Small wick is in both the hands. So because of which I don't want to take chance. So I will enter this stock only after above 654.5 or maybe 655. If I have to do it, I have to wait for some more time, because the high of this today's is only 654 plus. Getting what I'm trying to say. So which means we have not decided to enter this. I may book a trailing stop loss to buy this. Okay, I can actually book a trailing stop loss to buy this. Okay, and my stop loss will be what? My stop loss will be how much? Anybody can tell me?
So 637.
637. That is low, below this candle, right? Very good. So you can see below this candle, it is showing me a low of 637.45. So I may go for lesser than 637.45. So I have fixed up at 637. Okay, very good. So that is the answer it is. Okay, so we have not entered into the trade. We can wait till this reaches 654.5 or so. I can enter into the trade. So which means to some extent this trend line is really working, right? So we have screened the stocks out of 5,000 plus stocks. Now we have understood how to screen the stocks. So can you tell me other ways of screening this? This is the trend line is the only source for us for screening, or we have any other way out in doing it?
Sir, we can use another tool, charting.
Okay, so we can go for charting as well. Okay, so how many of you understood this screener that is being shown by trend line?
Sir, could you please repeat the part, like how we got the stock having Marugo?
Okay, thanks. So I'll just go to trend line now once again. Afresh I'll start. So TRENDLYNE, I just went up and I clicked enter. Then I go to screens here. You can see screeners. I click on this. So once I click, I get candlestick here. Click on the candlestick. So once you click on the candlestick, bullish single day patterns will come up. Click on this and then go to white Moroboso. Fine.
Yes, sir.
Okay, the moment you clicked it, the first one comes up something else only. It is because based on market capitalization, we have to make it a descending order. Okay, so we got this Container Corporation of India. Is it clear?
Yes, sir.
Okay, so this is one way of doing the analysis, and some of you told this is one way of another way of doing is maybe using charting.com. So we'll go to charting. I'll explain that as well. So how many were knowing this charting beforehand? Just raise your hands. So Ranjan, Roshan has actually raised his hand. Anybody else who are knowing charting? Okay, so only one hand is raising. So fine. So if you don't know how to use it, I'll explain you. Please concentrate. So go to screens here. Okay, so I went to charting.com. Then I have to go to screener. So click on the screener. And then you can see here, the moment I clicked on the screener, this page has come up. And click on create your own screen. Customize screener. Okay, so click on this. Okay, so I clicked on this again, I got this much. Okay, so stock passes all of the below filters in cash segment. Okay, so all the cash segment I want to now, which means all the 5,000 plus stocks which are listed in the market, I want to do this filtering. Okay, so I go here, press on this. Okay, so what should I write here? Okay, the price. Okay, so I just go here and see. So you know that the close should be equal to what? High, right? So I go to close here. Okay, so I go to close. Should be equal to what? Close is equal to what? If it is a bullish Maruboso, close is equal to high, right?
High.
So I click on high. Okay, so I did that. So this is my first criteria. So I want all the stocks which are actually listed on the Indian markets. I want the close should be equal to high. And what is the next criteria for me? Tell me. Open should be equal to what?
No.
Open should be equal to. I'm just doing it in front of you. You can see. Open should be equal to low. It is okay. So I made it, and it is asking latest close should be equal to latest high. No, we want yesterday, right? Yesterday means 1 day ago. Instead of latest, I click on the latest. I click here 1 day ago. Okay, so I go to latest and I click 1 day ago, which means I want previous close should be equal to previous high. Is it not? Then only I can trade today. So I click here 1 day ago. 1 day ago. So I clicked it. Any other criteria for us to do this? Anything else we want to anything else we want to do it? So we have, I think we have done with this criteria, right? Is it not? Anything else we have to be including this into this? Think and tell.
No, sir.
Nothing else, right? So I go run this scan here. You can see I go run this scan. So when I run this scan, I get the stocks which are actually hitting my criteria. So in this, you can see the volume I want to have highest to lowest, right? Descending order. So I click on it once. Twice I clicked on it. So you can see this particular Apollo has come up, Vinish, Infotech, what all the companies have come up now. So I'll go for this first one, BRIGH, Brightcom Group. Okay, so Brightcom, and you can see the percentage change is minus 4.89%. So I'm quite skeptical about this. So let me go for the second one, Apollo Microsystem. Okay, APOLLO. Okay, Apollo Microsystem. This is the one which has shown up. So I click on it now. Okay. So can you see this now stop?
Yes, sir.
So what has happened to this? Can you tell me? Because today this is the candle, and what has happened to yesterday? Yeah, that is 1 day ago. What has happened here? This is also candle, right?
So we can see that there was not that great momentum yesterday in that stock, but now today it is quite having a bullish trend.
Okay. Yeah. Anybody else would like to comment on yesterday's candle? Don't you feel that this is an operator stock?
So there was a gap up open.
No. Can you say that? Can you see that this is actually going to be in a stock which is something like a small cap it is? Okay. So volume are high. Volume is obviously high. It is okay. So I feel that this stock is there in the few hands. Otherwise, this dash would have not come. What do you mean by this dash is high, open, high, low, close, everything else is the same. It can happen to any of the stock like that. For if it has got let's say market capitalization more than 90,000 crores or something of that sort.
So is it also a trade trap?
Yeah, that is what I'm trying to say. You can see if you enter into this stock, only few it is there in the few hands. It can continuously go for some days. Continuously, it can actually go downward. See, in other words, what has happened here is this company stock has actually upward freezed yesterday. Right. You can see it went up like anything, and that is only one time the trading has happened. That itself is actually open, low, high, close. That's it. Nothing else. Do you want to trade in these kinds of stocks? As I told you, if the technical analysis is supposed to work, it should not be an operator stock. It should not be a small cap stock. It should not be a penny stock. I told you many criteria as such. Okay, and it falls into that particular criteria because you can see there is not much trading activity. We want trading activity to take place. Some trading activity has to happen, which means how do you know there is a trading activity which happens or not? Something like this. Okay. If the candle is something like this, we can understand that some trading must have happened. If you're not sure what is it, so just go and put it on minute chart and you'll understand what has happened. See? So today, this is 22nd June it is, and this is 21st June it is. Okay, yesterday what has happened, you can see. No trading at all it is. Only few trade must have happened. Okay, when you see the chart like this, once you make the chart into 5 minutes time frame, and something like this, if it appears, if the chart appears like this, please ignore that particular stuff. That is the meaning of this. Is it clear, everybody?
Yes, sir.
Okay, don't ever try to trade these kinds of stocks. These are not really worth of. These are not the technical analysis will not work. And forget about technical analysis. Even if you take fundamental analysis also, Okay, so I doubt whether these kinds of stocks will actually give you return or not. Maybe in the long run, they might give you a long run. What do I mean by long run? Long run, maybe 10 years, 15 years, 20 years. We don't know what is the time frame. Okay, so please be aware of these kinds of stocks. Okay, so again, make it to day. That is what we are interested in right now. Okay, so I'll go to the next one. So BRIGST, Brightcom Group. So I go to the first one, which is listed. Brightcom. This is the one, right? See. So don't, again, if you are again doubtful, go look at 5 minutes what has happened. Okay. So don't go to these kinds of stocks at all. So what I want to do here is I want to fix this problem, what we are actually doing it. Okay, so I'll add one more criteria here. Okay, so volume of the stock should be greater than 50,000 shares. I'll just put it as 50,000. Let's see what happens next. $50,000. I'll just put this 50,000 shares transacted. I just go for this running the scan. Okay, so you can see there were many stocks earlier, right? So every other stock actually got wiped out. You can see. So after this 8, there are many stocks were there, right? When I did for the first time. Now all those stocks went off. Those stocks are not there now. Okay, so this is one method of doing it, eliminating that. And if I want to bring in some more, okay, so instead of latest, I can go for 1 day ago because it should be same. So I'll go for one more thing, that is open price not equal to close price. Correct, no? Open and close should not be same. Means that the dash should not be there, in other words. Are you understanding what is the importance of this particular norm? What I am doing it right now. Open should not be equal to close means we want something like a body should be there for the Marubozu. That is what this particular criteria will ensure us, right? 1 day ago, open not equal to 1 day close. Is it clear what I'm trying to say here? Why is it I've actually put this? What happens if this criteria is not there?
So the candle won't have a big body, it will have a very small size, and it won't give us a good idea about whether we should go for it or not.
Yeah, so in other words, this if we don't put this criteria, it is going to give us the stocks where it does not have any body at all, right? We want something, a body that will taken care by this particular criteria. Okay, so I'll just now go for running the scan. So I'll go and see which all the stocks which, see, as I told you that those two companies went off, which we don't want. No? Those kinds of stocks went off. You can see Vinish Infotech, Infotech, whatever it is, Vinish, VISC, Visesh, VISCSH. So Visesh Infotechnics Limited, some stock it is. You can see this, what has happened to this. You want to trade in this kind of a stock?
No, sir.
So what has happened with the stock? Anybody would like to explain? This is a 5-minute candle, right? Okay, so let me put it as 1 day. See what has happened. Okay. Do you want to trade? You don't want to trade. Why you don't want to trade? Tell me, there should
Sir,
be
because we don't have any accurate pattern, sir. Whether there will be a bullish trend or bearish trend, we can't see anything right here.
Okay, so can I say that it is unable to give us any sort of trends here? That is one of the reasons
yes.
I can take. That is one of the reasons I can take. And what is one more reason?
And so maybe the technical analysis may not be work here because this is something rare trend which is not seen in any stocks.
No, that is not the answer. I'll not take your answer. Think and say,
Sir, because price is very small.
it is only 45 paise stock here. What I told you, you should never try to look at the charts where if it is a penny stock, it is. The price, the stock price is not even 10 rupees. It is just 45 paise. It is not even 1 rupee also. Okay, so technical analysis will not work on these kinds of stocks. So this is a penny stock. So we should avoid. The moment you understand that this is 45 paise, don't even make any analysis. Just skip and go to the next stock. So next stock is what? Nagarjuna Fertilizers and Chemicals Limited. Okay, so let us go to Nagarjuna Fertilizers. Class, can you see this? Can you see this?
Yes, sir.
Just a minute. Just a minute. Keep looking at this. Okay, so can you say that this is this is actually a candle? This is it is a bullish Marubazu. Clear?
Yes, sir.
Yes, sir.
And you can see why risk takers will be interested in this stock. Have you understood now?
Yes, a gap up.
Because there is a gap up opening. You can see there is a gap up opening. So it has closed 10 rupees and 55 paise, and it has opened at what price? Okay, so I'll just put it has opened at 11 rupees. Okay, there is a gap up opening of 50 paise, because if it is a stock of 10 rupees, 50 paise is a huge amount, right? 50 paise itself is a huge. So at least here this is working. Just because working, we should not be buying it, because you can see this is not fitting into our requirement. As I told you, this is a penny stock, it is, right? And you can see the stocks, if you go through the past history of it, at least for the last 1 year. Okay, so it has made traces like this. Okay, what do you mean by this? Is it is actually making upward freezing, it is happening, which means there is no liquidity. So liquidity is actually want of there is no much liquidity in this stock, and because of which what is happening, upward freeze is happening in this stock. Okay, so please be very careful about these kinds of stocks. Okay, so the technical analysis will not work efficiently in these kinds of stocks, and you should avoid, as I told you, technical analysis. If you're a trader, you should avoid these kinds of penny stocks. So these are the two reasons why we should be avoiding it. Otherwise, you're actually seeing that the bullish Marubozu is also working here. So we have seen it by actually doing this activity. So supposing, hope everybody understood how to actually create this screen. Okay, so if you want to know how to create this screen on yourself, whichever the criteria which you have in your mind, okay, you can go to I'll just go to Moodle. So can you see this charting.com scanner guidelines? So click on this, and then click on this link here. So here are the guidelines. Okay, you can go through it only once. These are simple guidelines. It's not like coding, or you want to have to code something of that sort. It is without coding, you can actually do screening of this. So these are the detailed guidelines. You can go through, and it is pictorially represented, and you can even watch some of YouTube videos also if you're interested in for framing any of the scanners of your own. It can be formed like this. Okay, so it is there posted on the Moodle already. So you can visit and do the scans on your own. Okay, is it clear, class, how to do scanning of the stocks now? If you want to do some technical analysis, so scanning is very important. So screening is very important. So we call it as a scanning of the stocks. through screener methodology. So that is what we have learned. Any doubts are here, class, before we move on to the next one?
No, sir.
Okay, so after understanding the Morobozo and how to screen the stocks. Okay, so tell me, what are the other methods of us screening the stocks through technical analysis? We have understood trend line. The other one, what we have discussed is the charting.com. Anything else is available for us? Yeah. Yeah, if you know how to do coding in Python, okay, so you can also code this in the Python, and you have to integrate your charts with Python. That is, you should know the API of that, and you have to integrate it. So once you integrate it, what happens is you will get the alert, real-time alert in that. So that is how, in case of algo trading, also people do that way. Okay, so that is one more technique. So if you know how to code in Python, so there may be some ready-made codes are already available in the internet. You can make use of those codes, and you can make your own screens as such using Python as well. Okay, so again, it is going to be part of your machine learning in finance. It is AI and ML with respect to finance. It is, so that is not the discussion forum here, because we are limiting ourselves to understand how the trading strategies work. Okay, and the outcome may be through Python you are doing it. Okay, so I'm not discussing that now. So next comes the spinning top. Okay, so what is a spinning top? Anybody knows? The slide is visible.
Yes, sir.
Yeah. So tell me, what do you understand by spinning top?
So the candle will have substance only in the middle of only in the middle part of the candle.
Only middle part of the candle. Okay. What do you mean by spinning top actually? Have you seen spinning top anytime? This is spinning top. Okay, you'll actually see candles will be having this kind of a pattern. Then they're actually called as spinning top. A spinning top is very interesting candlestick. Unlike the Morobozo, it does not give the trader a trading signal with specific entry or exit points. So in case of Morobozo, you are knowing it, when to enter the trade, when to exit the trade, or the stop loss. What do I mean is, you are knowing it. Okay, so but in case of spinning top, it is not going to give us any sort of trading signal. However, these are also quite important. How it is, we'll see. So, however, the spinning top gives useful information with regard to the current situation in the market. So, what is the situation in the market? It is going to tell us. The trader can use this information to position himself in the market. For taking the positions or not to take positions in the market, it will be helpful. A spinning top looks like the candle shown below. So, you must have seen in the chart, if you have been observing the candles, this is what is the candle which will be appearing. Okay, so this is actually called as what? Spinning tops. These are actually very small body and huge, the wicks. Wicks may be slightly huge as well. So what observation do you make with regard to the structure of this candle? Yeah, so what is your opinion or observations by looking at this candle? Class, if you don't...
It's a huge volatility.
Huge volatility.
Yes.
Okay. Yeah, so because
because the wicks are quite, large in this case, so there might be volatility in the market.
Body is less, but the wicks are actually large.
I want to add with Arpit, there is neither the buyer nor the seller can take decisions. So
Correct.
it's a indecisive candle, I can say.
It's an indecision candle. It is very good. You must be knowing technical analysis to some extent. Very good. So we'll see what is this observation is. So this is what a spinning top is. So the candles have a small real body. The upper and lower shadows are almost equal. It is. So the shadows or the wicks are almost the similar. So on the face of it, the spinning top looks like a candle with a small real body. The body is very small, but the wicks are actually going to be double the body of the candle. It is. So, but in reality, there were a few dramatic events that must have took place in during that particular day. So the construction of the spinning top, we'll see the small real body is there, upper shadow and the lower shadow. Okay. So what does this small real body signifies us? This indicates that the open price and the close price are quite close, right? That is why there is going to be what the body is actually small. Okay. Open price and the close price, the distance between that is very, very narrow. It is. That is one thing for sure. So because the open and the close price points are near to one another, the color of the candle does not really matter. Whether it is going to be a red candle or the green candle, that does not make any matter to us, because the open or close are actually almost not much difference in between them. Okay. So what really matters is the fact that the open prices and close prices are near to one another. What is really matters for us is they are near to each other. That is what is the observation we could do it. And upper shadow or the upper wick, what does it tell us is the presence of the upper shadow tells us that the bulls did attempt to take the market higher. They were trying, the bulls were actually trying to take the market higher, but they were unsuccessful. Because if the bulls were actually successful, the body should have been higher and the green candle, the big green candle would have been appeared, right? If they were successful in their attempt. Okay, so that is why the upper shadow is actually going to be seen there. Is it clear, class? Because of the because the bulls were not that impressive. However, they made an attempt to take the market higher. They were not successful. They were unsuccessful. Okay, and the lower shadow. Why is it lower shadow has happened? Because the BS did attempt to take the market lower, but they could not successfully do it because again it went up like anything, and that is why there is going to be a small body there. Okay, so the bears and the bulls both are actually friction is happening, and because of which it is actually settling at one point in price. Okay, which is neither too high, neither too not even it is going to be very very low as such. So it has settled somewhere near to open and close. Okay, so however, if they both were not successful, and because of which this particular candles must have actually happened in the market. So now think about the spinning top as a whole along with all its components, that is real body, upper shadow and the lower shadow. The bulls made a futile attempt to take the market higher. The bears tried to take the market slower and did not work either. Okay, so neither the bulls nor the bears were able to establish an influence on the market, as this is evident with the small real body. Okay, so the spinning tops are indicative of the market where the indecision and uncertainty prevails, as rightly said by one of the students, that I have not seen the name of the student. So there is indecision, that is what been specified. Indecision means you cannot really take a decision that market will be going upward or it is actually going to be going downwards. But what you know is it is actually going to go upward or downward right now. But you're not sure of the movement, whether it is going to be upside or the downside. You don't know, because the market participants are actually making it something like a tug of war. It is tug of war between the bulls and bears, but both were actually unsuccessful. Okay, something like that you can actually presume. Okay, so two things can happen: either there will be another round of selling can happen, or the market could reverse its direction and the prices could increase. We don't know. So clearly no clarity on what is likely to happen. The trader needs to be prepared for both the situation, that is reversal or maybe continuation. Okay, so that is what we are actually seeing out of this. So if the trader has been waiting for an opportunity to go long on the stock, probably this could be his opportunity to do so. However, to play safe, he could actually test the waters with only half the quantity. Okay, so I am not saying that he can actually go long. I am not saying that he can actually go short also. It is quite indecision point it is. However, what I can actually say, since it is uncertain trade, it is, if you are actually trading with, let's say, 5 lakh rupees as your trading size is that much, instead of that, you can actually go with only 2.5 lakhs, because your moves are actually uncertain here. Okay, so think about a spinning top as a calm before the storm. The storm could be in the form of continuation pattern or maybe reversal. What is continuation? If the trend is uptrend, okay, a pattern has happened and again it is going to go, it is going to go an uptrend. Then continuation of the trend, it is uptrend is continuing. That is actually called as what? Continuation pattern is. Then what is a reversal pattern? Now the markets are up for a while and what has happened is pattern has appeared. Now there may be chances that the market can reverse from this particular point onwards. That is going to be what it is actually called as what? Reversal trend it is. Clear it is what is reversal trend and the continual trend. Continual trend is trend will continue after the pattern. Reversal means the stocks will come down once the pattern has happened. So it can actually go either ways. That is why it is actually called as what? It is the storm before the calm before the storm. It is. There is a calming activity is there, which means there is a too much of struggle between bull and bears, and that is why the market is in the sideways or it is in the consolidation position, and it can take either ways. Okay, if it is either ways, that is why it can. That is why it is called as what? It can be reversal or it can be the trend continuities. In which way the price will eventually move is not certain. However, what is certain is the movement itself. We can certainly say that the market is going to go either ways very strongly. Okay, but we cannot really judge based on this. Okay, which way the market is actually going to be going. So be prepared for both the situations now. As a trader, you should be prepared for both the situations. Okay, you can see here the chart has been now displayed. You can see here. So 1, 2, 3, 4, 5, 6, 7, 8. So there are many spinning tops have actually formed here. Okay, which means there is an indecision for quite a number of days it is. So after indecision, what has happened? The market actually went upside. It broke out. The upward trend it is. So what is happening? The market is market was there in the consolidation mode for almost more than a week's time. And later on, what has happened? The bulls were successful in making this market going uptrend. So you can see there is a downtrend and a series of spinning tops have been formed here. That is how you will look at in the market as well. And now what has happened? They actually broke on the higher side, which means breakout has happened. Okay, so this is what it is. And see, there is one more chart out here. So you can see here as well. So what has happened here? The series of spinning tops have happened. When there is a spinning top happens, you know that the markets are actually going to be indecision. It is. We cannot really say whether the markets will be bullish or bearish. Okay, so the trend is what it is, a downward trend. So after the formation of the spinning tops, as we know that market can be either ways. It can go upward or it can go downward. But what has happened now here in this case, the markets have actually gone down. Okay, so that is what I have to say in this. Just a minute. I lost the slide. I went to Doji already. Yeah, so we were there here. So spinning tops in an uptrend. A spinning top in an uptrend has a similar implications as a spinning top in the downtrend, except that we look at it slightly differently. Look at the chart. What can we see and what would be the inference? Yeah. So can you tell me what can happen now? So there is an uptrend. There is going to be indecision in the market. So what can actually happen? Class, are you there?
Yes, sir.
Yeah. So tell me what can actually happen out of this. So there is an uptrend, a confirmed uptrend. Then there are a series of spinning tops, which is actually you can see here.
So there might be a resistance zone here.
Yes, there may be a resistance zone. Anything else can be seen here. So markets have actually run up so much, and the series of spinning tops has been formed, which means now the market is indecision in the sense that it can actually go upward or it can actually go downward now. So you're actually, as a trader, you're watching this continuously, and either way, if it breaks also, you should be able to take your position. Okay, so what you can do is you can actually take a stop loss buy position here. and also you can actually go for stop loss sell position here. Okay, so if supposing if hits any one hits, you have to remove the other order, and you have to go as a trader, you should be trading that way. Okay, and since we are only taking into consideration of the candlestick into case, we have not considered the indicators and the other forms of supporting techniques. No much can be said only by this. Okay, so what I'm trying to say here is, if you are trading only using this particular pattern, that is how we should be doing it. Supposing that if you have got a support and resistance levels, if you know it, okay, much after knowing how to do technical analysis using Fibonacci or something of that sort, then definitely we can say it is going to be a huge resistance here. Okay, so we should be cautious. Either way, it can actually break out. Okay, so can you see here one more? In this case, what has happened? The markets actually continued. So after the pattern, market went on going up, upside. Okay, it's a continuation pattern. In this case, this actually helped us as a continuation pattern. Here, this pattern helped us as a reversal pattern. It is. Okay. So if you have understood the reversal and continuation pattern, hope that is what I have to say to you through this. And next, so there is an uptrend in the market, which implies that the bulls have been in absolute control for the last few trading sessions, right? So that is what we are seeing. So however, with the occurrence of the recent spinning tops, the situation is a bit tricky now. So the bulls are no longer in control. If they were, spinning top would have not been formed in the chart. Okay, so with the formation of spinning tops, the bears have made an entry to the markets, though not successful, but the bulls gave a freedom to bears, right? So having observed the above, what does it actually mean, and how do you position yourself in the market? We already discussed this point. Okay, so any doubts so far, class, with respect to what we have discussed, that is the spinning tops, or maybe for that matter, the Marubozus, whatever we discussed in today's session, or maybe the screeners, what we have discussed.
So, sir, a question.
Yeah, go ahead.
So, when a spinning top has been formed, so the market can either go up or go down, continuing from there. So, what are the odds of it going in either direction, or continue being stagnant, or consolidate? What are the odds? Are there any chances of it going in either? Are there higher chances of it going higher or lower, or there are higher chances of it staying stagnant or consolidate?
Yeah, your question is quite valid here at this point in time. So if you have got an indicator, so that is where the indicator help will come. Okay, supposing that if RSI is making, let's say for example, it is in the it is just cutting the 70 zone. Okay, and if it is actually going to move forward, so what you can actually say by looking at the RSI and this particular spinning tops?
It may go down.
Is it not? So it may be bearish. It may be bearish because
Yes,
it is going to go with the it is going to go with the oversold region there. Is it not? So when you take a help of the indicator, then it is actually going to give you altogether a different meaning. So since this course we have to run this course, so not many were knowing what is RSI and all that. That is why I did not give that answer to you. Since this question been asked by you, hope you are now understood what is the importance of indicators now. Okay, so only taking into consideration of spinning tops, and we only can say that it is indecision, which means either direction it can go. Which direction we don't know. But when we take into consideration of RSI, once when it is going to go below above 70 zone, then we are sure now. At least we have some confidence that it might actually we might be ready to take up a short trade, but we are not sure. Again, I'm telling you. Okay, because we have to see the support and resistance level also. Supposing that it is a crucial level and the markets are breaking from that particular level, okay, slightly, then we should also be ready for what breaking down. That breaking down means you are again ready to go for short to the market. Okay, so we have to discuss support and resistance levels for that, and also RSI. So we'll discuss we'll take into consideration of all this once we finish off this the price action trading. Then we will move towards the indicators. Then you'll be having more comfort in taking up the trades in this case. Okay. So yeah, any other doubts, class? And others, supposing if you have not understood what I told you, RSI and all the indicators, don't worry much, because we'll be once again going through all of the indicators one by one. Okay.
So,
Yeah.
So in case there is a range and there are 3 to 4 spinning tops made in that particular range, and if one of the candles breaks that particular range with a closing, so we can go on the side where the candle has been closed.
Can you come again, Aditya?
So there is a range. There are 3 to
There is a
4
range. Okay. First of all, there is a
spinning
range.
tops
Range
made.
bound market. Okay.
Yeah, there in that range there are 3 to 4 spinning tops made.
3 to
Suppose
4
there is a spinning tops are made. Candles.
spinning tops. Okay. 3 to 4. Okay.
Suppose a red candle breaks a particular range, so we can with a closing candle can we go for a long?
Okay. So close after the red candle, there is going to be breakdown. You're saying.
I'm saying that if the range breaks with a green candle, after closing of that green candle above that range, we can go for a long position there.
Yeah, that is what I said you. So if it is breaking down from the range means what? It is actually breaking the support only, right?
Yes.
If it is breaking the support, definitely you should go short. And if it is breaking above, that is if it is actually crossing the resistance and it is going upside, right? So in that case, you should be going long. I don't know whether I have answered your question or not. Or, I don't know.
Yes, sir, you are. Yeah, thank you.
So let us go to the dojis now. So doji will complete and we will close the session for the day. So dojis are actually similar to that of spinning tops. Tell me, what do you understand by dojis?
Sir, in doji, the opening and closing is almost equal. And there are shadows. There is high low and the body is very thin, like opening equals to closing.
Yes, yes. So
And as far as I know, there are several kinds of dojis.
okay, okay. So doji means what? It is open is equal to close. Almost. And there are wicks to that. And if it is, it exactly looks like this. Can you see this doji now? Cross. Okay, so how can you interpret this? There are wicks. Okay, on the either ways there are wicks. So this is high and this is low. Open is equal to close here. We cannot really distinguish between open and close because both are actually market open at 100 rupees and it also market open at 100 rupees. It went up to, for example, 105 and it went down to 95 as close, low of the day. And it again came and closed at 100 rupees itself. If that is the case, you will see a candle like this. This is actually called as what? It is actually called as a doji candle. Okay, doji candle. We'll see what is it. So doji candle are very similar to the spinning tops, except that it does not have the real body at all. Okay, in case of spinning tops, there was some body over there, but here there is no body at all. Okay, so open is equal to close, virtually non-existence of real body. Okay, so the upper and lower wicks can be of any length. Okay, however, keeping in mind the second rule, that is be flexible, verify and quantify. Even if there is a wafer thin body, the candle can be considered as an doji. Okay, even if it has got some thin body, but still it can be considered as doji because we have to keep in mind be flexible. Okay, the color of the candle does not matter because it is not really visible in many of the instances. Even if the smallest of the smallest body is there, but still if it is red or green is visible also, you can actually ignore the color of the body. Okay, so the dojis have similar implication as the spinning top. If you have understood the spinning top properly, it is as good as you understanding the doji. It is both are actually the implications are going to be very same. It is. Okay. So whatever we discussed for a spinning tops applies to the doji as well, as I told you. In fact, more often the dojis and spinning tops appear in a cluster indicating indecisions in the market. Okay. So they actually appear in the cluster. It's not that spinning tops will appear and doji will not come or something of that sort. They actually appear in the cluster. If doji is appearing, next day it is going to be spinning top, and next day it is again in doji, and another 3 days it's going to be spinning top. Means you know that market is actually some consolidation is happening in the stock, and because of this, either ways market actually can move. Okay, so what you do normally is when there is a doji or what is it, the spinning top happens, you are actually looking at, you are actually curious to know what the news is happening. Okay, so the news might be happening that Z and the SEBI has actually given some order to you know that what the Z Limited, what the episode which has happened. Anybody would like to say what has happened with Z? Class? SEBI has actually given a strong statement against Z, and what is that statement? What is the action of the SEBI? Okay, so please go and do that, read it, what has happened. Supposing that there is a merger which is going to be happening and it is on the cards, but it is not really like whether the merger is going to happen. It is in the hands of the CCA now, Competition Commission of India. Whether the merger has to happen between the Sony and the Z or not. Okay, that is a major decision that is taking place, and it is going to be there in the news for the last couple of days now. And the results are not out, for example. Okay, these kinds of news will actually make your spinning stocks or maybe doji for that matter. Getting it what I'm saying? So which means market is not sure if if some news comes up, it may be either maybe a positive news or it may be negative news. If it is negative news, then what happens to Z? The Z company share price will collapse. Okay, that is where you have to go short. Okay, and if you feel that the merger is actually okayed by CCI, then what happens is a positive news will come up, and because of which Z Limited company share price can actually go up in the market. Are you understanding the scenario when the spinning tops or dojis can actually come up in the cluster? Okay, so that is a situation you should be looking at. So when you are actually going to be doubtful why it has been happening like this, so that has been reflected in the, you can see that can be reflected in the prices through price action analysis. Okay, but if you go and if you go in search of the fundamental news, why it has been happening so, then you get the answer many a times. Okay, so that is what I have to say in this. So in the chart where the doji appear in a downtrend indicating indication in the market before the next big move, we already discussed that, and you can see here there are some dojis which appeared. Okay, so what has happened? You can see market has actually broken upward direction. It is okay. So next you can see market has continuous uptrend. Then spinning tops and dojis happened here, and you can see afterwards market has actually broken. Okay, so I'll stop here, class. Any doubts are there, you can ask me. So what I'm trying to say is you should sometimes think of doing a fundamental analysis or looking at the fundamental news of the company, why there are spinning tops are happening, why there are some dojis are happening. So there is actually, it is supported by some fundamental news actually, many of the instances. That is why the markets are actually going to be consolidating as such. Okay, so hope the session would have been useful. Any doubts are there, you can ask me, class, before we pause. Okay, so I'll ask you a couple of questions now and you should be able to answer. Okay, so tell me what are the various methods of scanning your stock? So we have discussed some two and I have explained something. Okay, so tell me what are the various ways of scanning your stocks based on a candlestick pattern. Nobody. So what does spinning tops signify?
Sir, we can use I am answering the previous question. We can use a charting and trend line and run a query about the 1 day ago close equals to 1 day ago high. And also the volume should be greater than 50,000, or the one day ago open equals to 1 day ago low.
Why are we taking into consideration of volume there? What is the significance of volume there?
Sir, because otherwise it can be a trade trap, as you shown the example. The movement was very low, and
yes,
that's it.
Okay, so what are the three things we have to be keeping in mind before actually going and taking up the trades? We have done technical analysis on the chart, and you should not consider these kinds of charts. What kinds of chart we should not be considering for technical analysis?
So when price is less than 20, of a stock.
Yeah, penny stocks we should not be considering, in other words.
Penny
Yeah.
stock, then there's an operators operating that particular stock.
Okay, what do you mean by operators operating the stocks?
So continuous upper circuit or lower circuit can also be looked as an operator stock.
Correct. So can it happen in Reliance Industries Limited?
No, I mean there's a very less possibility.
Have you seen any time TCS, Reliance Industries, Infosys, the stocks are upward freeze or downward freeze?
Sir,
Have you
this
seen?
cannot happen because the size of the market cap is pretty heavy. So to
Heavy.
own a
And
significant,
also it is there in the derivative instrument. It's a derivative instrument. It is.
yeah, it's a
Because-
derivative. It's a
So because
derivative.
of which there are no freezing limits which can be applicable. We have discussed in corporate finance too, right?
Yes, sir.
Okay, that is why it will not happen on companies like Reliance Industries and other blue chip companies where the market capitalization is more than 1 trillion rupees, right? And what else we have discussed with respect to technicals we should be quite be aware of?
To avoid very long and very short candles, and market cap should be around more than 5,600 CR. And
Now we said market cap should be more than 50-60,000 crores.
oh, so, yes, yes.
5,000 will be your small cap again.
50-60,000, yes.
Yes, yes. Okay, fine, class. Thanks for being with me. Hope you have understood majority of the things what we have discussed in the today's session. I am actually waiting for when the offline session will start, because I have seen that many students are all the students are actually not opening their videos at the same time. I don't know how many of you are really listening. Okay, so it should not so happen. Ultimately, there is some time pass which is happening, and nobody is actually, only few are actually interested, and the rest they're not really not bothered what is been happening in the class or something of that sort. So let it happen offline. So I'm actually open to it. Thank you. Bye-bye.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you, sir.